And welcome to NTD Business. I'm Don Ma. U.S. stocks closed nearly flat on Thursday after a choppy trading session. This is as investors weighed another rise in Treasury yields with the latest batch of economic data and earnings. The benchmark 10-year Treasury yield rose as high as 4.198% during the session. This is the highest since November. And during the day, a Labor Department report showed the number of Americans filing new claims for unemployment benefits increased slightly last week. Meanwhile, layoffs dropped to an 11-month low in July, and another report shows the U.S. services sector slowed in July. S&P 500 lost 12 points, or 0.2%. NASDAQ lost 13 points, or 0.1%. And the Dow fell 75 points, or 0.2%. Now, if you're someone you know is taking Ozempic and Wegovy for weight loss and diabetes, listen up. Doctors are seeing some cases of stomach paralysis in patients who took the popular medications. The U.S. Food and Drug Administration has gotten similar reports. Ozempic and Wegovy both utilize the drug semaglutide. It mimics a natural hormone in the body that slows the passage of food through the stomach, which in turn helps patients feel fuller longer. Some doctors, though, are concerned the drugs may cause or exacerbate stomach paralysis in some patients, which can lead to excess vomiting. FDA said it has been unable to determine if the medications were the cause or if it may have been caused by a different issue. More research is needed. Quote, a steady deterioration in the standards of governance. That's what Fitch Ratings is citing as the leading catalyst for downgrading America's credit rating. And for market watchers, the decision is slightly unsettling in the short term and controversial as well. But what does it mean for you? Let's take a look.
Historically, the U.S. has always been able to pay its bills.
The U.S. has been among the safest credit risks in the world.
But credit rating agency Fitch is worried the nation's political climate could make it a riskier bet, subsequently downgrading the U.S. debt rating from AAA to AA+ on Tuesday. The U.S. has only endured a downgrade once before, back in 2011, when a debt ceiling standoff similar to the one from earlier this summer brought the country to the brink of default. But Fitch believes political polarization and uncertainty is on the rise and eroding confidence.
What's going to happen with Social Security? What's going to happen with Medicare? What's going to happen with the national debt? There are also some purely economic angles, like the recession that everybody's been talking about for a couple of years that hasn't arrived yet.
But that recession may never come. Bank of America abandoning its recession forecast Wednesday as attitudes are brightening amid a strong jobs market and cooling inflation.
All of a sudden, a lot of people are saying, maybe the Fed can pull this off and bring inflation down without causing a recession.
While the move by Fitch could lead to a tightening of credit, Bankrate's Ted Rossman says it's unlikely consumers will feel the pinch.
There are some things people are worried about, but I don't think this downgrade, at least in the near term, affects everyday people in a significant way.
At the same time, Fitch Ratings' decision to drop the U.S. credit rating is starting to have short-term ripple effects. Mortgage giants Freddie Mac and Fannie Mae also just saw their ratings fall slightly. And this wave could make it harder for U.S. consumers to find a house and possibly pay the bills. Here's a closer look.
Fitch Ratings says it had trillions of reasons to downgrade the U.S.'s credit rating. Many of those reasons are green and feature pictures of monuments and former presidents.
The debt to GDP at 113% and growing is clearly pretty alarming. Furthermore, the fiscal deficits are large and, again, growing.
Another factor that led to the U.S. credit falling from AAA to AA+, partisan bickering in Washington, D.C.
The Democrats have moved left, the Republicans have certainly moved right, and the center has fallen apart. And that just makes making difficult decisions very difficult.
And almost immediately after the downgrade was announced,
on cue, Republicans and Democrats are now blaming each other for the downgrade, essentially.
On Wednesday, one day after Fitch's call, credit ratings for Freddie Mac and Fannie Mae likewise slid to AA+, with the yield on 10-year and 30-year treasuries climbing as high as it had been since November. And although mortgage rates rose after the credit downgrade, many economists and analysts are questioning the decision.
Fitch's decision is puzzling in light of the economic strength we see in the United States. I strongly disagree with Fitch's decision, and I believe it is entirely unwarranted.
Apple's high-yield savings account offered by its partner Goldman Sachs has reached over $10 billion in customer deposits. The deposit account lets Apple Card users earn an annual percentage yield of 4.15% on savings accounts. U.S. lenders have had to offer higher rates on customer deposits to prevent clients from moving their funds to other high-yield alternatives. In March, Apple also launched its Buy Now, Pay Later service in the United States, and it's expanding its footprint in the financial technology space. Extreme summer heat and higher crude oil costs have driven gas prices to their highest level this year. According to AAA, the average U.S. cost for a gallon of regular hit $3.80 on Wednesday. That's 26 cents more than a month ago. Prices at the pump haven't been that high since November. However, it's still a lot cheaper than the peak average price of $5 a gallon in June of last year. According to AAA, hot weather has hampered output at oil refineries, which aren't built to operate in temperatures above 95 degrees. In extreme heat, companies scale back production for safety and efficiency purposes. BMW said it was raising investment in electrification faster than planned, but it also says that it was too soon to set an end date for combustion engine car production, with sales still strong in major growth markets like China and the U.S. Here are the details.
BMW says it's raising investment in electrification faster than planned, but it's too soon to set an end date for combustion engine cars, with sales still strong in markets like China and the United States. The carmaker said on Thursday it was close to hitting its target of 15% battery electric sales this year, beating Mercedes-Benz and Porsche. Still, CEO Oliver Zipser, long an advocate of investing in emissions-cutting technology, said there was, quote, no indication that the world is renouncing combustion engine vehicles. On a press call following half-year results, he refused to set a target end date for their production. BMW reported a 2.9% drop in second quarter net profit, in line with analysts' expectations. That was after last year's figures were boosted by its decision to take majority control of its Chinese joint venture, BMW Brilliance Automotive. However, it said second quarter earnings had benefited from higher pricing and sales, which rose 11.3%. Those slight price increases were down to higher raw material costs, the firm said. BMW echoed European rivals in striking a cautious tone on the global economy, and warning supply chain and inflationary issues were easing but not over, while still adjusting expectations of its performance slightly higher. It forecast growth in the European automotive market, robust sales in the United States, and slight growth in China for the remainder of the year, after raising its annual outlook on strong orders and an improving supply chain.
For some kids across the country, summer is over and they're headed back to class, and some experts are predicting an increase in back-to-school spending this year. That's along with a slight slowdown in inflation. Take a look at how much more parents are spending this year, and here's 5 tips to save some cash.
New school year, new expenses. Parents are shelling out more cash in 2023 to send their kids back to class. According to a new Retail Me Not survey, the average American household will spend $1,498 on back-to-school supplies, electronics, and clothes. That's $251 more than last year's spending average. Just like with everything else that costs more, experts say parents can blame inflation.
It adds up so fast. It's kind of like Christmas. We're buying 100 different things from 100 different vendors, and it's so easy to lose track.
So, what can you do to save money and avoid a back-to-school spending hangover? Jessica Allen from the website Living Well, Spending Less has 5 tips. 1. Take inventory of what you already have, and then decide what you really need right now, and put the rest on a wish list. 2. Set a budget, and then involve your kids with the shopping.
The easiest way to do this is to give them the cash. This is a life skill. The budgeting is a life skill, and actually paying for items at the counter and interacting with the service staff
3. Buy in bulk and split the cost with other parents, neighbors, or friends. 4. Stretch those electronics a bit longer instead of splurging on new ones.
Look into items that you can swap or pass down. Is there a graduated senior who no longer needs that graphing calculator?
And finally, wait for the shopping rush to pass.
Wait until your children get into their classes and see what the teacher is actually asking for.
And finally, the IRS is going digital in 2025, and that means you could get your refund sooner. It's dubbed the Paperless Processing Initiative. The agency is ditching paper filing tax returns for digital ones. The Internal Revenue Service made the announcement Wednesday. IRS says going digital is going to cut the processing times in half and speed up refunds by 4 weeks. Taxpayers will also be able to submit more correspondence online, and the agency thinks that will enable up to 125 million paper documents to be sent every year. People will also be able to e-file 20 additional tax forms, which will enable up to 4 million more tax documents to be filed annually online. And if you're not so digitally savvy, no worries, you could still mail in paper returns if you choose. And now for further analysis on this, with me is Dan Geltrude, America's accountant. So the IRS allowing all digital submissions for 2024. Maybe just start off, tell us, what does that mean?
Well, the genesis of this is from the Inflation Reduction Act. There was $80 billion worth of funding going into the IRS. Now, the IRS is taking a portion of those funds in an attempt to modernize their operations. And the way to do that is twofold. One, using artificial intelligence, and to really be able to make that work, they need to have submissions being done digitally, because once it's on a digital format, the IRS can process that information so much more quickly. And what a lot of people have found out there is when they've been filing paper, it's taking forever to get their refunds. So this is good news for a lot of people.
And what they're doing is they're also converting paper tax returns to digital as of right now, right?
Yeah, they are. They're going to go through a process of all the historical data that they have on record, converting that over to a digital format. Now, why would they do that? Well, at times, the IRS, believe it or not, cannot find paper. So now this is going to give them the ability, particularly when it comes to audits, to be able to go back and historically look at tax returns very quickly to look at trends and other things that may seem suspicious.
And I want to focus on your point that this is a good thing for taxpayers. Maybe with some examples, how is this a good thing?
Well, primarily, and I deal with the IRS all the time, it takes forever to get inquiries responded to. So as far as the IRS providing service to taxpayers, specifically with the speed in which refunds can now be done, is going to be an advantage for everyone. So you get a notice, it takes a long time to correspond with the IRS. That time should be cut down significantly, as well as refunds. But remember, Don, there's another side to this. If you want to hear more.
I mean, what is it? What is it? Tell us.
The other side to this is what everyone fears, the IRS's ability to do more audits. What I believe is going to happen here is the IRS is going to digital format, as well as using artificial intelligence. They're going to be able to shift their personnel away from those, shall we say, lower level tasks of inputting information to now be able to focus in on the audit process. So how it all comes together here, the IRS gets everything digitized. They have all the historical information digitized. They use AI to sort through all that, and then they start targeting people for audits. So that's the other side of the scale here. There's some good and there's some not so good news for taxpayers.
Now, are you saying audits are going to be on the rise after this?
I believe so. And if there aren't more audits, what's going to happen here is they're going to be specifically targeted at tax returns that they believe have a higher risk, let's say, of people being tax cheats or not paying all the taxes that they should be.
So taxpayers will still have the choice to submit documents by paper. What is your recommendation here? Should they do that?
Well, I've always said that people should use online filing because it does speed the process. If you're getting a refund, there's really no reason not to. And eventually, I'm telling you right now, all tax returns are going to have to be filed online, and everything is going to be digital. It's a slow process. But I would say, you know, probably in less than 5 years, Don, that's how it's going to be across the board.
And just one final question. How are we doing with the massive backlog of unprocessed paper tax returns from 2022?
Yeah, they're still getting through that. It's a slow process because it's all manual. So I believe they're going to be using their personnel in that area to get caught up. And then by moving to digital, they should not really be falling behind to that extent anymore.
All right. Thank you so much, America's Accountant. Great speaking to you.
Thank you.